Welcome. In this video, will ZBCN coin price fall harder? We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand.
When a long-term analysis is conducted on the chart, it is clearly observed that the price has been increasingly tightening under a certain resistance curve and has touched the structure multiple times but has so far failed to break through this level. This structure is commonly defined in technical analysis as a descending curved resistance line, or more generally, a downtrend line. These types of curves indicate the presence of selling pressure in the market and that a prevailing bearish trend is still in effect. However, a price movement that repeatedly touches this line without breaking it may also signal that the market is maturing and preparing for a potential trend reversal. In the current scenario, the price has approached this descending curve many times, each time encountering strong resistance and turning back downward. These repeated touches bring into focus one of the most important principles of technical analysis. The more a resistance is tested, the higher the probability of a breakout. Continuous contact with this level signals the determination of buyers and suggests that the resistance level is beginning to weaken. Especially when the resistance curve becomes slightly shallower with each new test, it's another indication that the price may be approaching an upward breakout. At this point, it is necessary to examine more deeply what this descending curve means. Descending resistance curves typically show that the market is in a correction phase and that sellers still dominate. Each rally attempt ends at a lower level and the price pulls back again. However, this structure does not continue indefinitely. Over time, buyers become more accustomed to this resistance level, grow stronger psychologically, and market participants begin to anticipate a major price movement if the line is broken. This expectation, once a breakout occurs, usually leads to large volume buying and sparks a rally. The inability of the price to break this descending curve for now indicates that sellers still dominate and that buyers have not fully taken control. However, the repeated testing of this level is a very clear sign that the line is starting to weaken. Each test suggests that some of the sellers at that level have closed their positions or are showing less resistance. This increases the likelihood of a breakout on the next test. For this reason, investors are focused on this curve and how the price reacts to it. Furthermore, such descending curves are not only considered simple resistance levels in technical analysis, but also trend-defining structures. In other words, when this curve is broken, it is not just a resistance level being surpassed, it is also a very strong signal that a long-standing downtrend may have ended. This encourages investors to take more decisive and confident steps regarding trend direction. Especially after the break of this descending curve, the candlestick pattern and trading volume that follow are of critical importance for confirming the sustainability of the upward movement. If a breakout occurs, how the market reacts to this structure is of great importance. If the price moves above this curve and holds there, it signals the beginning of a new uptrend. However, if the price quickly slips back below the curve after a short-lived breakout, this is considered a false breakout. Therefore, investors should not only look for the breakout itself, but also observe the price behavior that follows. At this stage, pullback movements are highly significant. If the price returns to this former resistance line after the breakout and finds support there before moving back up, this confirms the breakout and generates a strong buy signal for investors. From a market psychology standpoint, these descending curves carry significant meaning. A level that has acted as resistance for a long time becomes a powerful psychological barrier in investors' minds. Once this barrier is broken, it's as if a psychological threshold has been crossed. Investors begin to believe that the price will no longer decline, and this psychological shift causes new buyers to enter the market, former sellers to close their positions, and the overall supply-demand balance to shift, supporting further price increases. The upward movements that may occur after the break of a descending curve are usually sudden and strong. This is because pending buy orders are triggered, trend-following algorithms activate as the price gains upward momentum, and the rally creates a chain reaction of buying. Therefore, the break of descending resistance curves is not only a technical level being surpassed, but also a transformation in overall market dynamics. In short, the descending curve identified on the chart is not just a technical resistance level, but also a strategic zone where market sentiment and investor decisions are shaped. The price repeatedly touching this level shows that the market is preparing to break this barrier. If this breakout occurs, it will open a brand new chapter from a technical, psychological, and strategic perspective. For this reason, investors should carefully monitor this curve, observe price behavior, and make decisions by analyzing the new structures that will form after the breakout. But we can't base our analysis only on the curve. Let's also look at the other metrics. Stay tuned.
Upon detailed examination of the current price movements, it is clearly observed that the asset value has reached a highly critical level. This level has repeatedly served as a barrier to downward price movements in the past and has elicited strong reactions, standing out as a key area. In technical analysis, such zones are defined as support levels, and they play a major role in determining the direction of the market. At present, the price is trading directly above this support line, indicating that the market has reached a crucial decision point that may define its future trajectory. Support levels in technical analysis are not just horizontal lines. They represent areas where buyers previously became active, where the supply-demand balance was disrupted, and where the price gained strong upward momentum. At these levels, investors look for new buying opportunities based on historical price behavior. Therefore, supports serve not only as technical markers, but also as psychological barriers. Especially in the current situation where the price has tested a support zone multiple times and responded upward each time, a critical opportunity for observation has emerged for investors. The current price consolidation and sideways movement at this level suggest that market participants are struggling to make a decision and are divided between two opposing expectations. On one hand, investors familiar with this zone's past performance are seeking long positions. On the other, a climate of uncertainty persists due to global risks, technical weakness, and declining momentum, where sellers remain active. If the price breaks below this support level, it does not merely signal a breach of a technical point, it also reflects a significant psychological breakdown among investors. Such critical support breaks often trigger stop-loss orders, activate new sell orders, and lead to much faster downward movements. Therefore, these kinds of breakouts are frequently referred to as waterfall drops, as the market is suddenly overwhelmed by a wave of selling pressure, deepening the decline. However, the alternative scenario must also be considered. If the price once again reacts strongly upward from this level and the support holds, this indicates that buyers still maintain control of the market and that upward movement may continue. A positive response from this support, especially if accompanied by increased volume, could signal not just a short-term bounce, but the beginning of a medium-term uptrend. These kinds of reactions demonstrate that confidence remains in the market and that buyers have not lost their conviction. Volume profile analysis also provides valuable insight at this point. If volume is declining as the support level is approached, it indicates that selling pressure is weakening and the market is becoming more resilient to further downside. Conversely, if heavy volume selling occurs while the price is at the support level, it shows that the downward move is gaining strength and that the risk of a breakdown is significantly increasing. The support level where the price currently stands has also served as the origin or endpoint of many major past price movements. This increases the level of trust and interest in the zone. Any potential breakdown or rebound at this area could indicate not only a short-term directional shift, but also a broader trend reversal. That's why investors should view this level not simply as a line, but as a decision zone, a turning point, and a psychological threshold. Whether support levels hold or not is shaped not only by technical indicators, but also by fundamental developments. Especially in fragile zones like this, incoming news flow, central bank decisions, macroeconomic data, or geopolitical events can trigger sharp price movements. Therefore, technical analysis should not be used in isolation, but should be considered alongside news and market sentiment. In conclusion, the current support level where the price is positioned lies at the heart of the ongoing power struggle between buyers and sellers. If this level is broken to the downside, it is highly likely that the existing downtrend will deepen and new lower lows will be tested. However, if the support holds and the price reacts upward again, it could mark the beginning of a new bullish wave. For this reason, this level is not just a technical point, but also holds great strategic and psychological importance. What investors need to do at this point is adopt a patient and disciplined approach, closely monitor technical indicators, and avoid making rash decisions before a clear breakdown or reaction occurs. It should be remembered that the strongest trends often begin with reactions from these critical levels.
Within the framework of technical analysis, RSI is one of the most critical and closely watched indicators. It is an oscillator frequently used by investors to measure market momentum and anticipate potential trend reversals. RSI not only identifies overbought and oversold zones, but can also be analyzed through internal trend lines, particularly downward or upward sloping lines that reflect the direction of momentum over a specific time period. Recent analyses clearly show that a downward sloping trend line has formed within the RSI indicator. This structure has taken shape as RSI values have consistently made lower highs over time. In other words, although there have been upward attempts in momentum, each has been weaker than the last, leading to the development of a bearish trend within the RSI. This trend line currently acts as a technical barrier on the RSI and is preventing momentum from recovering upward. However, one of the most important principles in technical analysis is this: every trend line exists to be broken. Especially with highly sensitive indicators like RSI, these internal trend structures signal the buildup of underlying energy in the market that can be released suddenly in the event of a breakout. In the current scenario, the downward trend line within the RSI is in a critical position on investors' radars, and close attention is being paid to the potential impact of a breakout on price. This downward sloping line represents periods of weakening momentum and reduced influence of buyers in the market. But if the RSI breaks above this trend line, it is interpreted in technical analysis as a momentum reversal. This would indicate that buyers are beginning to regain control of the market and that the upward movement in price may accelerate. Such a breakout typically does not remain limited to RSI alone, but also brings about accelerated upward movement on the price chart. These kinds of breakouts also significantly alter the psychological structure of the market. Downward trend lines in RSI serve as a kind of confidence measure for investors. When momentum is consistently suppressed, investors approach rallies with caution. But when this trend line is broken, especially if it coincides with a clear breach of a resistance level, investors begin to adopt the mindset that momentum is shifting. This shift in sentiment can lead to new buyers entering the market and more aggressive upward price action. Trendline breakouts in the RSI are also among the most valuable technical signals that indicate a market reversal, particularly when price is still trading near the lows but the downtrend in RSI has been broken. It signifies a momentum shift that the price has not yet reflected. This scenario creates ideal opportunities for bottom fishers as the price has not yet moved upward, but the RSI has already broken out, providing an early signal that prompts many investors to start taking positions. The RSI trend must break for the price to rise.
Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analysis, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.